Today is the 7th of September, and we would like to welcome you again to MegaTrade101.com's video presentation. Supporting our market view reports, we would like to request your attention on the screen to have a better understanding of our sequence of market analysis. We would like to request you to, as a due diligence, to start off with our August 20th, where the strategy and ability to spot a potential trade is essential to better understand how we collaborate on the analysis, the effectiveness of the analysis in itself, and subsequently to the next order of analysis, which would be on the 1st of September towards the 5th. So we would have a better understanding of how we were able to derive as far as supporting our September 5th market view analysis. In our market perspective 2, dated the 5th of September, scrolling down on the US dollar here on a daily basis, the configuration here was on a consolidating and declining prices for the dollar, with the opening gap here from the previous day's closing moved higher, but on a trading basis on a day-to-day level, the price action went lower. And this has a similarity with the May 7th closing price, although the price higher than the previous day's closing. In this sequence, there is a making of a price reversal, but however, the general trend for the US dollar is still on a top heavy with a technical divergence here, as we have explained it in our August 18 to the 23rd market view analysis. And this was prior to the closing price of the market on a day-to-day basis. Although it looked that it had a small window of opportunity for it to move higher, however, it is resting on the primary trend line support as indicated here by the solid green line, but there is already a projected decline up to the Fibonacci retracement level, which we will show you here on the next subsequent chart. Here we have the updated version of the US dollar on September 7th, prior to the earlier report on the non-farm payrolls. The previous catalyst prior to the decline that led to the 38.6% Fibonacci was the FOMC minutes that pushed the dollar lower. There was a consolidation, and the final report that gave on the decline on the US dollar was the non-farm payrolls, although we do had a mixture of reports where the ADP numbers of 201,000 was previously reported. However, the 96,000 gave the trigger or the fuel to push the US dollar lower to the levels of 80.17 where it closed, which is around the 78.6% Fibonacci. Although even on the technical outlook, the dollar has still enough room to move lower because of its bearish outcome from Friday's report on the non-farm payrolls and the possibility that other analysts are calling a QE3 in the making. Subsequently, looking at the weekly here, there is still some room to fill in this particular gap that has been left out. Although if we draw a line on a freehand basis here, it had penetrated that particular support. However, these levels, for every penetration on a major trend line support, or resistance, however, for that matter, there is still a possibility of a recovery since it is a first penetration. So expect some pullbacks within a day-to-day basis within towards next week. The opening price level here for Asian to European trading towards the North American session, depending whether the opening price would be higher from the previous week's closing of today, then there is enough room for a slight corrective move depending on short coverings and liquidations of the US dollar as well as the euro. The possibility for the extensions on the low side would be the 79.45 level towards the corrective move on the 80.4345 basis points for the US dollar on a weekly basis. However, like we have said, since it is a new support penetration, a corrective move higher, although there would be in between trade sessions where the tail and extensions of the week would go within that range of 79.80 to the current price of the closing at 80 and back to the 80.45-47 trading range within that 78.6% Fibonacci retracement. And as we all know that the huge spillover of the decline on the dollar due to the non-farm payrolls number had a heavy toll on the euro as well as the pound, and including that of the euro pound cross rates, where both pairs that we've concentrated on have been quite good to our trading and the currency of choice that we have made. In our September 5th market perspective, page 2, we have indicated here that the particular, let's see if we can move it slightly lower, that on the 5th of September, the euro was working at 126.17, although it was attempting the 1.2660 price level indicated here, although the resistance towards the 127.2550 range would be the actual initial of target. Then, however, we would like to emphasize that the registered low of 1.2040 dated July 24th was the pivotal turning point for the euro to turn from a bearish trend to a turnaround for a rally for the euro. However, the report from the non-farm payrolls already confirms that this particular formation has been bullish all the while, subsequently with a spillover for the euro pound cross rate. Now moving forward, in today's closing for the euro dollar on a daily chart formation here, and the euro pound as well as cable in itself have shown that the closing price on the euro and the high price it has achieved was at 1.28 28.03 level. However, the flag formation here towards a break, if we can show here, let's try to expand it here, that from point reference here on the low, see if we can get it. Although on a daily basis, it is confined here on a symmetrical triangle formation within a rising channel and has broken that particular trend line resistance and has moved forward, although this market is basically fundamentally oriented and triggered by a major report where a projected technical outlook from low to the recent high projected higher would be in the area of, let's see if we can get it, at 2819, 1.2819, which is quite close to the psychological more important 1.2880 major resistance on the euro. However, in this particular, if we can show the pound with our subsequent long position before on a breakout here on the way down that we have liquidated, although a secondary long position based on our previous video dated the 23rd of August, we did have a secondary, but on the way down we took out our first position where first in first out or FIFO would have been logical on the way down, and subsequently on the way up is a continuing of the secondary position long, where it's just like doing or maintaining your first position at the same time, continuing it to as high as 1.6033, and the next target level initially would be at the 1.6050, which is quite attainable for the first 2 to 3 trading days of next week. However, on the weekly basis, let's see if we can get it here. The same scenario looks as though the 1.6142 would be the extensions. Of course, there's no such thing as straight up or a straight down. So the next subsequent high, which would be lower than the previous of 1.6302, would then be initiated. Remember that it is confined within a rising channel, but breaking from the resistance. However, the resistance would be here towards the extensions of 1.6148, depending now on the volume, although the momentum is still there, and the interest on the Williams percentage level, the relative strength of the pound as well as the euro is technically overbought. However, as we have mentioned, again, it is a fundamentally oriented market at this point in time. Now, knowing that the pound may be reaching an area where there would be some resistance at the 1.6060 level, which we did mention, since that is the market or the currency that we have decided to trade, protecting our gains in the long term is just like when we start buying cable and cross trading it with the euro pound cross rates, buying the euro subsequently if in case the pound makes a corrective move. It's like protecting our pound position with a euro pound cross rate. However, this particular position, and we have a 0.7990 entry level and currently slightly above that price. However, if we look at it more on a bigger picture, like so, that particular consolidation, like everyone said, it was a double top. Here, have indeed been penetrated simply because of that fundamental report on the decline of the dollar from the non-farm payrolls number, where subsequent euro-pound cross rate have been one of the benefactors of beneficiaries rather of the decline in the US dollar, including that of the pound. Now, with that said, momentum on both currency pairs are still outstanding, and the breadth for the US dollar is still negative. Now, depending on the market outlook for next week, what we would be doing is, although this particular strategy is a little bit complicated and maintains 2 to 3 positions at the same time, although cross trading has been our forte, so we would be looking at the behavioral prices of the market. However, if in case there would be any market spooks for the US dollar, although there would be a lot of fundamental reports for next week, so more likely between the opening in Asia and Europe, we would be looking at the market real close, although it would give us an opportunity to maximize, not that we're being greedy, but simply maximizing the market potential of this as we have spotted it, although the confirmation only was made rather with the report on the non-farm payrolls, where the pound in itself made a mega trade move, as we call, and the euro pound cross trades would be a protection to and maximizing the market opportunity. However, if in case the market does the opposite direction, all we have to do is simply liquidate our positions, including that of the sterling yen as well as the dollar yen, wherein as long as we have an overall net position positive for our trades and look at the next market opportunity, then we would be good. We hope that this market outlook would have helped and have a better understanding of the behavioral patterns of foreign exchange, and particularly the dollar, the euro, the cable, as well as the euro pound. Um, as we have said, that anything that has been good to us, that's what the currency pairs that we trade with. Best of luck to your trades and have a good day. Thank you very much.